Hello and welcome to Big Deal. It almost seemed like a 2020 match in the second half of this year when deal activity really picked up, catalyzed by a gush of liquidity fueling the equity markets and also the pandemic disruptions giving new opportunities in times of adversity. Now, deals worth $80 billion clocked in, and top deals from new pools of capital really lined up in India. Global giants like Facebook, Google, and marquee private equity firms, they joined Reliance's fundraising plan, which was nothing short of a spectacle. So those were the highlights of 2020, and solving for debt concerns really continued to be a key driver for most of the deals, and private equity investors also spotted value creators with an eagle eye, and we saw many buyout transactions as well. But the new year, well, that brings in new avenues which are opening up to tap global funds. So what's in store for that, and what are the learnings from 2020? Let's find out from none other than Zia Mody of AZB & Partners. Zia, it's always good to have you on CNBC-TV18. Pleasure speaking to you. And it's so refreshing to see you outdoors as well. You're definitely holidaying unlike us. How will you remember 2020 personally as well as professionally?
So I think, and thank you, Nisha, for having me on this show, and Happy New Year in advance. I think that for many of us, the roller coaster ride was pretty much the same. I think when COVID attacked the world in March, all of us froze partially, just in a state of uncertainty as to what the pathway forward would be. I think personally for myself, obviously, worried about the firm, its revenues, top line, what sort of business we could expect to continue with, what would fall away, what was the pipeline that had to keep going. But I think from a business point of view, from our clients' point of view, what we've seen is that people have sort of digested what COVID has meant to each business and to each one personally.
Yes.
And the last quarter has certainly been more both in terms of perception as well as in terms of the deal activity that we've seen. Yes. So I would say started off in a semi-paralyzed way, but end of year pretty much dealt with how to cope with it for the most part.
That's why I called it. Yes, that's why I called it 2020 towards the end, because it was looking like Deal Street was trying to overcompensate for the rest of the year, which was largely dead. But Zia, as far as the recovery mode is concerned, the overall sentiment is concerned, you have an interface with not just your business houses in the country, but also the global investors, the private equity investors. So you have a very big canvas of understanding. How do you see this recovery and therefore the sentiment for business?
So from a AZB firm point of view, we started COVID with Reliance Jio. So it was completely virtual. It was an amazing exercise, and the orchestration by the Reliance team, led largely by Manoj Modi and of course Mukesh, was impeccable. So we saw the largest FDI come into the country, 20 billion. And as you say, marquee private equity players completely believing in the Jio story and in digital India. But that was more the exception. We saw private equity hunker down. We saw deals get delayed. We saw our country heads complaining to us by saying when they went to their IC committees, the IC committee said, don't you know there's COVID? Go back for a lower valuation from the promoters. The promoters, of course, in varying stages of capital requirement and not wanting to sell out cheap. So very interesting dynamics at that time. We also saw, as you rightly pointed out, a huge amount of raising of capital. So early, the start of the year, we saw we did Axis, ICICI, HDFC, and of course the 7 billion Reliance rights issue, one after the other. So you could see that the market was still willing to give money to top class players. And I think quality was then the absolute requirement for people to write a check at that time. But now you've seen how the stock market has surged, which is really counterintuitive to if you think there is a COVID depression. And we see now, because there is so much dry powder in the PE firms, that they are looking at India again in the last quarter at least, extremely actively. So I would say that the end of the calendar year has not been as bad as you would have thought when you started off with the calamity of COVID in April. And I think that that trend, according to me, we'll come to it when you talk about 2021, will continue. So we see now suddenly more term sheets being exchanged, more bids coming into the market. I think for a long time, private equity just didn't feel comfortable introducing new deals into their system when they hadn't even shaken hands or been in the same room as the promoter. And I think that's now all changing. And since everything's opening up a bit, we see activity coming back.
That's right, Zia. In fact, deleveraging has been one of the most important driving factors in the COVID times. And in fact, the big business houses have realized that, and therefore the massive fundraising exercise as well. But do you not think that it is the survival of the fittest and it's only the choiced few who got more money and the actual ones who really require it right now to sail through? Is the market so conducive that even they are going to get the funds?
It depends. I think that, earlier you saw only the really quality marquee houses who could attract money. I think that there will be an expansion of that circle now, simply because money has to flow into something and it can't keep flowing into the same businesses and the same houses forever. So private equity will have to expand. Banks will have to lend to more than AAA clients. And if you look at what happened in 2020 in the banking space, Nisha, the classic one was the Yes Bank restructuring. For us as a firm, it was a huge learning exercise. The interaction with the Reserve Bank, the administrator, the former management, the new management, rights, everybody as investors trying to see how attractive this would be in the mid to long term. So the banking industry, you look at LVB and DBS, I think that is going to see changes. The Reserve Bank is going to look at cooperative banks much more strictly. And with that sort of cleanup and that sort of restructuring and the market requiring, India requiring more financing, and you see all these stressed houses coming in to take out existing NBFCs, Indian NBFCs, who need to be taken out simply because they don't have the staying power. So you'll see a lot of foreign capital coming in as well on debt restructuring.
All right, we'll talk more in depth about what the 2021 outlook and crystal gazing really looks like. But Zia, I wanted to understand, what are the most important changes that you have seen because of COVID-19 in 2020, which is going to have a long-lasting impact?
So obviously, outside the law, the biggest change I've seen is just the digital learning across all businesses and service providers. And I think that to some extent, the way the world will work in India will have changed to some extent. Now, how much and for how long and how permanent the change will be is to be seen. But clearly, the mind space has shifted from the traditional way of working to a much more flexible way of working, if you like. In terms of takeaways of 2020, I think that personally what I saw was the ability of some of the regulators to really quickly react to market realities and market pain points. And in particular, my interaction with SEBI has been so satisfying, because every time I would see that there was a logical pain point that needed addressing, really a couple of phone calls achieved the desired effect of at least conveying the pain point. What the regulator did or did not do was his domain or his prerogative. But the ability to listen, the openness of communication, both with the Reserve Bank and with SEBI, I found particularly satisfying. And if you look at the way the changes were made, small ones, reducing unnecessary interaction between regulators which were inconsistent. You look at how they eased the capital raising issue, the directions for the rights programs, and the MCA, the Ministry of Corporate Affairs, kept passing enabling regulations and circulars to allow paperwork not to drown what was already a very difficult situation.
Yes.
So I would say not really any big bang stuff, but certainly constant incremental changes to reduce pain points. Some knee-jerk reactions as well during COVID, but I would think much better. Half the glass was much more full than empty.
All right, so that's definitely positive thinking, Zia Mody. And clearly agility as well as online solutions and also giving operational capability with social distancing have been some of the key highlights of the business community, and they've dealt with it. But we'll slip into a short breather on Big Deal, but we'll continue the chat with Zia Mody, and we will focus on the Outlook 2021 when it comes to the deal street. Stay tuned. Welcome back. You're watching Big Deal, and we are in conversation with Zia Mody on the future outlook in terms of the deal street in the new year 2021. So Zia, we were talking about the various learnings in 2020, but what are the most important deal trends that you're picking up for 2021, which we are bracing up for now?
So I think that private equity is going to come back very strongly. As I said earlier, it's simply because of the dry powder that they have with them, and their global fundraising, even in COVID times, has gone extremely well. So Asia and India will certainly be a focus of investment activity. I think that, they will continue to look for not only good value, but also the sectors which they see are going to be important for India. So you continue to see a huge amount of interest in financial services, NBFCs, banking, and of course, pharma and healthcare has taken prime space even in 2020. I also see the mind shift to many more control deals as opposed to significant minorities earlier. 5 to 7 years ago, you had 1,000 questions coming from private equity as to what would happen if they had to make a takeover offer, if they were classified as promoters, how often would they have to worry about going to jail. I think that mind shift has now gone into the fact that we need to control our destiny, and we're willing to pay the premium to get control, and we are willing to go through the takeover offer and comply with the listing requirements that SEBI requires. So a lot of control activity, I think, will happen in 2021 as well. Logistics and warehousing and other sectors will drive. And we also see real estate picking up. You've seen so many of the recent deals announced where foreign private equity has come in. Platforms have been created with Indian real estate houses. So overall, I think 2021 should definitely be a year where at least I am personally not too worried about deal making.
Right. There'll be enough and more action. And Zia, you were mentioning about real estate. Yes, Brookfield and Blackstone together have, I think, captured a lion's share of the real estate assets, and more deals could be also in the pipeline. But what I also wanted to understand, and just playing the devil's advocate here, is that, yes, we have already seen the semblance of buyout deals by private equity firms in this year, and that will continue. But what about the market valuations? We've hit 14,000 on Nifty already, and private equity is a value picker. And exits also define whether they want to enter at this point. So we still have to see the exit point of view when it comes to the buyout successes. That's still to be seen. And in that scenario, the markets are hotting up. What do you see in the short term then if the market valuations are high?
So I'm seeing two trends. In fact, I was just talking to the country head of one of my large private equity clients yesterday, and he was telling me that they see the values as too hot, and therefore they are waiting and taking a deep breath. So that's one way of looking at it. The other way is where other private equity investors are quite happy, even today, to jump into bidding situations and to make sure that, they win. And when you have a bid situation, as you know, Nisha, the valuations are always higher than if you had an exclusive and you were negotiating one-on-one. But those deals are still happening. And I think it's a combination of perhaps a longer-term view of India and its growth and putting COVID behind them and saying, okay, the effect may last a couple of years, but we're here for the longer term. And also realizing that, frankly, with all the dry powder that each one of them has, I mean, how many deals are there, right? They're not 1,000 deals that you can say, I'll let this one go to every one of them if the price is high. Right. So private equity is having to pay more value than they would like. They try to shave it down as much as possible. But I think the traction is definitely going to continue in 2021. The ask of the promoter in a bidding context versus the private equity not wanting to lose too many deals.
That's right. But also private equity has played the role of giving capital and rescuing some of the companies from the debt situations as well, which earlier used to be the forte of other promoters and other strategic players. And we used to see more consolidation than private equity. So this is a big trend that really picked up. But we did see one large transaction in Future Retail bought over by Reliance Retail, where the debt situation was solved for by another strategic. Do you think that the promoters, the corporates have the firepower for more consolidation or buying out other companies which are not doing well?
Not many would, I think, frankly. I mean, if you take away the business houses like the Tatas and Reliance, very few would have the firepower to write very large checks. And I think that is what has changed. What earlier could be resolved with a reasonable check size, now the check size to rescue a firm or to put a business back on track has become much larger. And that is why you see all the special sits funds coming in to try and see what value they can derive and what discount they can get, and yet make sure that the guy that they've taken out is not on the street. Otherwise, the deal won't happen. You see IBC, which has been suspended, of course, but that's coming back, right, in April. So you will see other deals that come to the table as a result of IBC being revitalized. And there again will be opportunities both for special sits as well as for private equity and some strategics to come in and to bid for assets which are on the block. You see a lot of power companies that were in stress. Those will be back on the block in April, many of them. And similarly, large manufacturing companies that could not survive COVID as much as they would have liked to will again be struggling because, at that stage, the banks again will be forced to put them into IBC. So if you look at how DHFL is playing out, that's a story in itself, right?
That's right.
You've got bidders who, when they were put to the test, increased their bids. And the starting bid and the hopefully the closing bids are going to be quite different for the benefit of the banks. So I think they will still up their price if it's a bidding contest, Nisha.
All right. And we have had many learnings from the IBC process and many hits and misses. So many learnings will now define the future course of action there. But what about the role of the regulator and the government? What are the key reforms which are really required for ease of deal making, ease of attracting FDI inflows into the countries here?
So a couple of things. I think that, what set back everybody in terms of FDI was the Press Note 3 that the government had introduced in terms of needing approval of investments from neighboring countries, and primarily the neighboring country in focus would have been China. And I think the lack of clarity as to what are the bright line tests out there put many deals on hold or delayed them. I think there's a market practice that has developed, but I think that, the government would do well to formalize what their thinking is in terms of China investment, because it is not just direct China investment, but it also flows through indirectly.
Yes.
And so if you look at many private equity firms who have Chinese LPs and large Chinese LPs who have invested across the board in many significant private equity houses, how do those get treated? How unwelcome then is the investment by the private equity company itself? And, even if you go for approval, the other thing that I think the government would be well advised to do is to speed up the approval process. I think there are over 100 applications under Press Note 3. And I may be wrong, but I'm not sure if any of them have really gotten approved.
Yes.
So what is the streamlining of this which results in an outcome? If you look at other regulators, for example, you take the Competition Commission, which we deal with all the time, even during COVID. Earlier, they did not have virtual hearings because they were worried about confidentiality. But then they enabled technology to deal with that. So today, deal making is not getting stopped by any regulator, really. I think when the Chinese question comes up, that is when Press Note 3 has to be facilitated.
I agree with you.
The working of it has to come up and make it easier for India.
No, this has been a pain point and the entire industry has spoken about it. So hopefully we will get some resolution and clarity on that front in 2021. And also global direct listing norms, those also are something that the whole industry is waiting for. But Zia Mody, thank you so much for joining us with your wealth of knowledge, and look forward to meeting you in 2021. Have a great year to you and AZB and partners from CNBC-TV18.
Happy 2021 to all of you.
Thank you. Thank you so much. Thanks for joining us. So that was Zia Mody with her views on the deal street. There are a few aspects which are going to drive the M&A transaction as well as the private equity transactions in 2021 as well. But tackling debt as well as raising fund for growth are going to be the prime focus on the deal street next year. Have a great year. Happy New Year to all our viewers from CNBC-TV18. Thanks so much for tuning in.